Hey, it's Tim. It's about 8:40. Big breakout last night for Asia. People clearly focused on the China CPI tonight, but last night Asia traded as if there is no inflation in China. And I think you have to watch the food weighting on the CPI basket to definitely determine just how much the government has to do here. But the structure of the household spending with the changes in the economic growth are the things that people are watching. Big breakout also in India, and we've highlighted the Sensex in the area where I think you really had to take a look, and I think you still do, but oversold. So some of both the industrial names and then the banking names really getting a nice look here. The other thing to watch is that European spreads are starting to blow out again. Portugal, Ireland, Greece, all up 3, 4, 5% wider on the CDS. The 10-year in Portugal getting around 455 over to an area where it becomes unsustainable in terms of their ability to refi. So just keep an eye on that. Japan confirmed Monday that China's economy had surpassed its own. They're now number 3. I think if you expect some of the tidal winds of the currency moves of the last 6 to 9 months to change, this is a great place to be owning Japan. The export sector is alive and well, and clearly you look at a couple of the key names like Toyota, even some of the electronics manufacturers who have really fallen apart behind their Korea counterparts start to look kind of interesting here. So dollar up another 50 bips and has shown very good support off of what was really a long-term trend line and holding in. Meanwhile, volatility, which last week tracked down to kind of new medium-term lows here, looks like it needs to bounce. So complacency exists out there, especially in global markets. What's interesting today, though, is that emerging actually trading higher than global, and over the last couple of days we started to see a bit of a bounce in emerging versus some of these global names. But one of the obvious themes that has been out there for markets year to date is the global trade away from the emerging trade. I think fund flow data last week probably punctuated that, and I think in the short run that's as bad as we're going to see that imbalance. I think you're going to see money coming back into EM, and I think you have to continue to watch that story. Middle East, clearly, again, a place where you've got volatility that could be below the surface. Obviously, the Egypt headlines, very good for markets, certainly fantastic for the Egyptian market, and you're seeing a recovery in all the big blue chips, whether it's the Roscom Constructions or the Comey Banks or some of those names. But I think you really have to look at the seeds of unrest that have now been planted in Jordan and Saudi Arabia, in some of the more integral parts of that complex. You buy this oil weakness for sure. This is the supply disruption bid that may seem to have come out of oil for the short term is an opportunity. We will talk to you soon.